Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glenn Sutherland.
Welcome to a new episode of A Canadian Investing in the U.S. with Glenn Sutherland. This week my guest is Ian Horowitz. Ian, you want to just give everybody a heads up? Like, what do you do? Who are you? How'd you get there? Maybe a little bit of your story and go from there.
Yeah, what's up? My name's Ian Horowitz with Equity Warehouse. We own and operate an eclectic portfolio. We're opportunistic investors. We primarily do commercial real estate. However, we've owned everything from single families, which we still do today, Airbnbs, office space, self-storage, apartment buildings, and everything in between. So we enjoy it. My background is me and my business partner, we were actually firemen for the city of Baltimore. We wanted to be big city firemen. We got hired in 07 and 08. And since most of you guys are in Canada, I'm sure you're aware of what happened in 07 and 08, like everybody else. But here in the US, it was all hell, global financial crisis. And they threatened to lay us off. They threatened to, and they did, switch our pension. They closed companies. Promotions were gone. Ability to get off was gone. So we said, you know what? There's got to be a better way. And we started buying Section 8 rentals. And that's how we got our start, two dumb firemen, and we've built almost a $70 million portfolio to date. We were able to leave our jobs, retire, and we are now allegedly free. So here we are. So
Yeah, sounds like me. I'm free, but I work a lot on this real estate stuff.
Yeah.
I don't have to report to somebody else. At least I don't have to report to anybody but investors. But
hey, man, you want to have a sick day? You can have a sick day. It's snowing, sleeting here today. It's my daughter's birthday, so I popped in the office to do this, and then I'll head back home and do my thing. And that's the advantage. It's not necessarily money; it's time freedom, and that's the biggest thing.
Yeah, no, I totally agree. I laid on the couch Monday because I was just super sick on the weekend, and yeah, I could do that. Yeah,
Yeah.
So okay, I don't know what we're talking about today, but you just talked about like a ton of different strategies. You did like multifamily, self-storage, Section 8 is what I wrote down. From all these different strategies, which one did you actually enjoy the most?
I personally today I enjoy commercial real estate as a whole. That's multifamily, self-storage, building, industrial, whatever it is, because we can actually co-invest with our friends and family, and there's room to operate with them. We can bring them in the deal. We're buying multi-million dollar assets that we're proud to own. Like we just bought a 55,000 square foot office space that we're converting into flex space right here in our backyard, just outside of Philadelphia. We paid $5.5 million. We'll be all into it for about 6.5, and we'll sell that thing for 10 million bucks. And we get a piece. Our friends and family, who are all blue collar for the most part, firemen, teachers, nurses, cops, military, who invest with us. We get to share that experience, and I think that's what's like super exciting for us. So I'd say that's what we really enjoy because we're still doing it today. But I'll kind of flip the question a little bit. My best learning experience, the way we ended up where we have today, is because we executed single family real estate really, really well for a long period of time that allowed us to get to this quote unquote level of commercial real estate.
So I always like to ask this question when I hear someone like, hey, I started like right in 2008 to 2010. So they hit like first the crap point, and then they had like the perfect buying opportunity. The opportunities, the strategy you were doing back then, do you think that that's something that's similar to what people could do today, or is it a different strategy altogether?
Yeah, so we started in 2012 is really when we got our start, and we didn't know it was the absolute bottom.
Yeah.
But we were able to go in with blinders because we didn't have that trauma from like operating in 07 and 08, watching the bottom fall out. We're like, oh shit, like we were able to, almost come in with like a false sense of security because we didn't have that trauma. Yeah. Now, with that being said, like we didn't know it was the absolute bottom. Turned out 3.25%. Like I was crying about it then, like, oh, this is ridiculous. is really, really good rates, right? Like, looking back on it, it was a really good experience. Listening to other people, their experiences in '07, it was the same thing that happened in COVID. Like a lot of people that dealt with the '07, '08, '09 crisis are like, this is the end of the world. We're out. We just kept our heads down and kept buying and kept executing our business plan. Why? Because again, we didn't have that trauma from then, and we felt like, hey, like we've had a good experience so far. We're going to continue to have a good experience. And operating during COVID was actually like almost like a cheat code because so many people were on the sidelines that allowed us to buy assets that we normally might not be able to execute on.
So just buying in that period, like you're probably like listening to the media, you're listening to other people who lost everything in the last few years before that. Like the fear had to set in a little bit, right? Like, did you have like concerns about this? Because like what I hear right now is a lot of people like they're afraid to get started right now because they're like, no, I want to wait until we're at the bottom, but you honestly don't know you're at the bottom until it's already halfway up to the top.
Yeah. Well, that's the thing is like everybody wants to be at the bottom, but nobody knows where the bottom is, right? Like nobody knows the bottom of the stock market. I'm not a stock market guy, but when I had to buy stuff through my fire department job, for one of our retirement accounts, it's like, well, you just buy every week because then you cost based average. Well, it's the same thing. Like you can only do the best deal that you can do by what's presented in front of you at that time, right? And looking back on it, yeah, I should have bought every shell I could have for $5,000 to $25,000 and just sat on them for 5 years, and then they would have been worth 50 grand magically overnight. So while I would say it was exponentially easier probably to get in the market there because the barrier of entry was super low, we've had several other entry points. If you look at it, Donald Trump, for us here in the US, and I'm guessing your show gears towards wanting to invest in the US, right? Donald Trump comes in, rates drop, boom, there's a buying cycle. There's an opportunity. Biden comes in and all this crazy crap's happening. Interest rates go up, but people still need places to live because people aren't selling their houses. Boom, there's an entry point. Like you need to view it. And if you sit there and you can always what if to any deal to death and be like, I'm out. Like, what if? Yeah, well, what if? Like, what if you never buy? What if you never execute? What if you never do it? Then what? So for me, I'd rather see someone go out, buy a deal, marginally make money. Maybe they break even. Maybe they lose a few bucks.
Yep.
It's okay. You did it. Because guess what? Now you're going to learn by doing. And that in the fire department, that's really what it came down to. You could tell us what it's like to go in a fire, but until you're in on a fire and you feel the bees stinging you because it's so damn hot in there, then you're like, oh yeah, I think I'm getting burnt. Maybe it's time to leave because I remember hearing about this in a class. So you have to go and execute by doing, not just by sitting on the sidelines and waiting for the exact perfect moment. None of us are Warren Buffett. Warren Buffett has one thing on his side that no one else here has, and that's time. The dude has been in the market way longer than us, and that's why look at it. Look at his wealth curve, right? And if you never get in the market, you never have that opportunity to be in the market for a period of time to allow you to make money.
Yep. No, and that's why I always try to say like, it's always going to be just a different strategy that it's working in different kinds of markets, right? But like, especially right now, if you can get in and start getting paid in USD, like our Canadian dollar's dropping. If you get an extra $1.45 for every dollar, like that right there, right? Like if ideally, anytime you're putting money into a project, you're going to bring more money out of the project. And, even if it's a harder pill to swallow to go in, you're gonna the cash flow, or if you're gonna do a rental or like from the flip the chunk that comes back, like you're gonna be getting more, and there's always situations where you don't, but honestly you're not losing money until you sell it and just keep renting it if you have a property that's just hit the market wrong.
Yeah, and so you guys, you have an interesting additional complex problem to like your investing because you're converting Canadian dollars to US dollars. So there's like you guys might find deals and opportunities that work better. Like we had a lot of it. There was in Baltimore, there was a gigantic Jewish population, like not like my last name Jewish, like legitimate like Hasidic Jews, and they would bring investors from Tel Aviv. And they're like, 4%? Great. Sign me up. I'm like, 4%? Like, that doesn't even, like, I don't even want to turn the truck on. Yeah, like, that doesn't do it for me. But you got to remember, they're buying the one-bedroom apartments in Tel Aviv for $1 million, right? Because it's inflation's so out of control. So you guys might have a different buying metric to say, man, like arbitrage, every Canadian dollar, I get back $1.50 in US, like that's a win for me. And that's a metric that I can't compete with. So maybe you guys might buy deals that I wouldn't. My deals need to look a certain way. I run a meetup, an in-person meetup, and last night we did this short-term Airbnb panel, and this guy goes, "Oh, what's the metric return you want on your money?" And everybody on the panel is like, "Dude, that's subjective. Like, it's different for every single person. If you're ultra wealthy, a billionaire, 4% might be a win, right? Because it's hard to place that much money. And if you got your last dollar and you're trying to double it, you're looking at something completely different. So it's different for everybody at any given time."
Yeah, well, and safety, right? Like some people might take the 4% if there's like, hey, I'm buying a new construction. There's nothing really going to go wrong with this, at least very little, compared to, hey, I'm going to make my, 20, 30%, but I'm buying a 70s or even 30s build, right? And there's going to be more maintenance. There's going to be more unexpected things. And at this point in my life, that's what I'm looking for. I just want something to, you know, give me a solid, pref rate that pulls out every quarter and I get my money and I can live off it. And I just need to, uh, sustain, right? I don't need to, I'm past that. I'm not at a point where I want to take the risks when you're different age groups, right? I have more free content. So if you're interested, I created a PDF guide and a video to go along with the PDF guide to complement it. And what the guide is all about is the 5 most common mistakes that Canadians make when investing in the United States. So if you're interested in this free guide, go to CanadianInvestingInTheUSA.com/mistakes. And let's go back to the podcast. And it's free.
Yeah, I would say age group, experience, and everything in between. Like risk aversion changes. Like this deal outside of Philadelphia, um we recently purchased is it's not something that we would have bought day one because the returns are maybe a little less than what we're used to getting. But you know what we traded? We traded a lesser of a return in exchange for lesser of a headache, right? Like we're in a primary market, the ease of transaction. Like we've only owned it for a month, well, a little over a month, and we already have 3 offers on condo sales. Like it's just more stability. Like, and your goal when you're investing in general, you might start with the trash. Dude, I started in the hood of East Baltimore.
Yeah.
Like, you ever watch The Wire? Like, that's where we were.
So exactly what was
Yeah.
popping in my head.
Yep. We as firemen worked on the west side of Baltimore. So if you ever watch The Wire, it's all true. And we invested over on the east side, and it was the same type of areas, right? But we started by grinding away just like a day at a time. It was like the first house I ever bought. I paid $25,000. Section 8 rental. It's called the 4x4 because it's 4 blocks by 4 blocks, and it is literally right at the hood. But I got 1250 rent. And when I had the chance to exit it, that $50,000 turned into $125,000. And then that $125,000 is now into some of our commercial assets that hopefully turns into more money, into better assets and better. The goal is always to be trading up to do better and better and better. And I think too many people, and we fell victim to this, is, oh, well, I bought it, it's fine, I'll just own it forever. And it's like, well, there's a few limiting factors. One, you want to improve the class of properties you own and reduce your headaches, right? Number 2 is you're going to have trapped equity over a period of time that you need to release. If you're making $3,500 a year off a rental property, but you got $50,000 of equity in it, well, it's time to sell it. It's time to recap it and keep it moving, and buy that better asset class and continue to grow and become a better investor over time.
Yeah. Yeah. And I even found like lending comes into some of this, right? I know a lot of people that did like bridge lending on purchases of multifamily a few years ago. They just didn't get the expected exits. And if they didn't buy a rate cap, the new lending that they were going to go into for a long-term loan was not what they were expecting. So it's one of those things like that even to this day, I never lost any money because I wasn't in those projects. But I anything I want to be part of, I want it to be fairly safe, and ideally, I would rather go into like a solid loan right off the start, like some sort of HUD or financing to start with, rather than dealing with the unknown. Or if you're going to go into the unknown because you are doing a renovation, is protecting yourself with whatever insurance you can get, like even insurance for that loan, right? Hello, everybody. Thanks for listening to the podcast. I just wanted to let you know that I've created a new coaching program. I believe the new coaching program has way more value than any of the programs that have even existed in the past. What we've done is pre-recorded all the lessons so that you can work through it at your own pace, which is pretty cool. And then we're going to meet up on a regular basis to answer the questions, do deal analysis, and actually spend our time together working on things instead of spending our time learning things. I think this will make a seamless transition to buying in the United States and will help you solve a lot of your problems. If this is of interest to you, go to glensutherland.com/coaching. I hope to help you guys invest in the United States, and I hope we provide as much value as possible. Back to the podcast.
Yeah, no, I think that's a good point. And the longer you're in this game, like, we finally had a fire in an apartment building. It happens. Like, we had a fire next door to a house. We had the water leaks. Like, you start to see the insurance claims come through, and it's like, okay, well, this apartment building, and we were even like teetering if we should have bought it or not, because it was in a tougher part of town.
Right.
We're like, oh, we got this. And then it was like, shit. Like, we walked into one. And it was like, what are we doing? And after that, we're like, that's it. We're done. We're out of Baltimore City. We're not buying there anymore. We're only looking at better assets. Like, today on my desk, I'm sitting actually right before we hopped on here. I was underwriting a brand new 85,000 square foot flex space build in a submarket of Philadelphia that sits between Philadelphia and New York City. Yeah. It could service Jersey, Central PA, all the way down to DC, all the way to New York City. And it's like, we called one broker. He's like, dude, I could fill that in like less than 18 months. He's like, your place will be completely filled. And it's like, all right, man, that's what I want to deal with. The days of like losing all this, those that aren't watching, it's my hair and the gray and the beard, right? Like, it happens over time. That's fine. But like, you should be alleviating your problems and optimizing your portfolio. So what we do inside of our company is once a month, we sit down, we run through all of our properties, every single family piece of real estate, which is almost 100 of them. Well, it's starting to thin out now. Yeah. All of our commercial assets, any loans, any other investments we have, we go through every single one of them and say, is it working? Is it not? Is it time to sell? Or are we keeping it? Because like, there's two sides to that coin. It's time to sell because this thing's a headache and we're never going to get it right. The other side of that coin is, man, like, and I'll give you an example, is because it's easy. Everyone understands the negative. Let's talk about the positive ones. We had a 44 unit apartment building in Ranson, West Virginia, it's like Harper's Ferry. It's like just over the line of Maryland. It's basically an extension of Maryland. It's not like, what everyone thinks of West Virginia. And we bought them. We owned them for 4 years. We were cash flowing $100,000 a year without thinking about it. The three partners, me, my business partner, and our other buddy, Pete, took home 30 grand a year without thinking about it, left 10 grand in reserves every year. And there was still additional cash above and beyond that. And we said, okay, Pete, like, we talked to our property manager, said, well, what if we sold it? So he goes through, well, it turns out we could sell it and clear over $1 million. And I looked at everybody, I said, dude, that's 10 years of cash flow in one shot. Let's sell it. Let's go. Let's make the money. And we put it up on the market, got an offer immediately. And we made over 7 figures. We got 10 years of cash flow in one shot. We took that cash and we reinvested it into our new build project that we're doing. This, a set of houses, a small subdivision, 10 houses, and 40,000 square feet of flex. And it's like, cool, here's our new opportunity. We're going to fund that and we're going to go on to our next deal and we're going to continue to grow. So it's really exciting. And I think that's what people need to do. They need to always be combing through their portfolio and say, what's good, what's bad, what's time to sell, what's not. And it's both sides. It's not just the bad, it's also the good.
Yeah, no, I like to go through every year and then try to basically figure out how they're actually returning with all the repairs and the actual true numbers of how the properties are performing, and then sort them from top to bottom, and then either find a way to take those bottom ones and move them up or sell them. Just get them. But, in all honesty, sometimes you just look at it and you're like, there is ways that we can improve that property, and that's the one to put some focus on.
Well, and I think there's a minimalist mindset that comes along with it. It's like, oh, well, if I sell this apartment building that we're making $100,000 a year on, we'll never find anything else. And yeah, dude, it is really effing hard to get a property to cash flow and work properly. I get it, dude. I understand it completely. But dude, if you really love this game, and gals, dudes and gals, if you really love this game, you're always looking at new opportunities. There's always something out there. And that goes back to the thing you were asking earlier. Is now the time to get in? Well, there's always deals, whether it's a good market, it's a bad market, whatever it is, you will always uncover some sort of deal. And by thinning out your portfolio, selling stuff that doesn't serve you anymore, or you've maximized the returns on, it allows you to continue to grow and stay in tune with what the market's doing. And if you can compare to Warren Buffett invested in companies that were never going anywhere. He was basically buying Class A assets day one for the long term. And we could all do that, but we all need cash flow today, right? Like he was managing other people's money. That's how he made his money, blah, blah, blah,
Hey,
blah.
you can't live off equity.
No, you cannot. In his game, as long as the stocks were going up, he was winning. He's betting on the America. In our game, we need to exit and execute on new cash and be able to redeploy it into new deals and continue to grow that. And the other thing is some markets are always changing, like Baltimore was good for a period of time. It doesn't serve me anymore. There's rough areas that I'm like, okay, it's time to move on. Some of our self-storage portfolio we're like, yeah, really fun business, but we don't want to travel all the way across the country anymore. We want to operate within 4 hours of our home office. And that's a business model. And that we learned that by doing this. But if we kept those forever, there would always be that strain on us. So I think it's important. And I think you need to have an abundant mindset to be like, there's always going to be a deal. Take chips off the table. There's always going to be a deal.
I love it. This is a great conversation. And I love that it wasn't actually really a topic, but it was just about growth and mindset and how to actually, how to think about this. But, geez, Ian, we'll have to get you back in like 6 months. So Ian, if people are like, hey, Equity Warehouse, where is it? What is it? Give us a spiel. Where do people go to find you?
Yeah, the best place to find us is equitywarehouse.com. You can check out how we co-invest and co-lend with our friends and family. If you want to see what we're doing out in the world, go check out Equity Warehouse on all the social sites. We're out there. I communicate the most on Instagram. Always happy to talk to you, anyone. I have had a few Canadians reach out. I still haven't really figured out how you guys work going across the border and operating, but I'm always happy to talk about real estate because it's the best asset class you can buy. So, check us out there, and I will definitely get back to you.
Awesome. Well, Ian, awesome conversation. Thank you for coming on the show. Really appreciate it.
Yeah, man. Appreciate you. Catch you guys.
That was a nice video. Bye.